If we really want to see durable structural change, we need to think much more broadly than making one investment in one fund. So the way that we approach systemic investing, the way that we define it, is to look at the different levers of capital that we could help our clients deploy to bring about a change that doesn't otherwise exist in a more traditional way of thinking about point source impact solutions. We don't want to throw the baby out with the bathwater either, because the traditional impact investing industry has a lot of merits. It has generated a lot of capital to invest in really meaningful change, like supporting the energy transition, new innovations in healthcare, education technology, and systemic investing offers this next level of depth to understand not just that point source solution, but how does that interact with the rest of a system. And if we really want to see durable structural change, we need to think much more broadly than making one investment in one fund. And so the shift that we're seeing is really more mindset driven, that as people start to interact more with their portfolios, they're not asking more about what's in my portfolio, who's performing, why. They start to ask what kinds of products and services are there in my underlying portfolio, what kinds of impact is the portfolio having today. For investors who are just interested in long-term capital preservation, how do we understand the role that a systemic investing strategy could play in creating a more resilient society that will bolster portfolios in times of market hardship? The challenges to adopting an approach like a systemic investing approach at the institutional level is that there are real established rules in place already that govern how an institutional portfolio is managed. And it's very hard to change those rules. There are legal structures around the concept of fiduciary duty. We've, as an industry, collectively refined the endowment model, how we diversify assets and think about where to place capital to minimize the risk and generate the most compelling financial return. So now you insert this kind of bomb of systemic investing on this whole thing that says, wait, you have to rethink all of that. How do we do that? In a system that's been working this way for a really long time, you have to take it piecemeal. And so one of the challenges is to understand, where do we start? How do we start to shift the narrative and ask different questions, or maybe the same question but in a different way? Institutional investors are always talking about compelling returns. What is your edge? How are you going to generate financial return? What's the risk? How do I get comfortable with that? At a systemic level, in order to really embody that philosophy, we need to appreciate that that's part of how the world works, and also acknowledge that some catalytic systemic investment opportunities are worth investing in, and they may not generate the same kind of returns because the system as it exists today is extractive by its nature. It's a winner-take-all system. So it has been a real honor over the last year or so to get more engaged with this emerging field and help shape it in a way that maintains the integrity of the field while also enabling more capital to come into it.